Welcome into Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. I've got good news and I've got bad news. Good news is you got me for the entire day. Bad news is you've got me for the entire day. How about that? All right, I got a smile on my face because we're rocking and rolling, ready to go. Let's see how these overnight markets did, because that's really what you want to see. You don't care about what I have to say. Let's go to the corn board. Let's bring that one up and see what we've got behind us, and we're off. We had a lot of red on the screen here when I did the radio show earlier. We're 3 3/4 cents lower in the March to 444.5. That's a penny off the lows, but we've only had a 4.5 cent range, folks, so it's real tight still. But just eking lower, bleeding lower, leaking lower, whatever you want to say. That seems to be the late trade lately. Maize down 3 1/4 cents to 455 1/4. So that's corn. Let's move on to the beans, see what they did overnight. 14 1/4 cents lower, 12.08. 3/4 cent off the low there, and we've had about a 14 cent range. May 13 3/4 cents lower to 12.19. Wheat in Chicago wheat. What's happening there? Well, that's down 6 3/4 cents in the front month. That's March, 588.5 last, a penny and a half off the lows there. Maize down 7 1/4. I hate saying down, but that's what it is, folks. 598 last. That's 3/4 cent off the low there. From Chicago wheat, we go to the hard red, Kansas City. That's down about 6 to 7 cents across the board. 6 cents lower in the front. 6.16s last. Penny and a quarter off the lows there. We've had about 9 cent range. Maize down 6 cents to 6.14 1/4. How about the spring wheat? What's going on there? Spring wheat, that's Minneapolis, down 1 3/4 cents to 6.90.5. Got that $7 line in the rear view. May trying to fight with it. That's also down a penny to 6.97. So spring wheat down about 1 3/4. Well, 1 to 1 1/4 cents across the board, I guess. Let's go to cotton, and we'll get to our guest analyst. 31 points higher, that cotton trade. We'll see overnight. We'll see if it does anything different when we ring the bell here. But let's bring in our next guest analyst. That's going to be Ron Hoops. He's with Midwest Marketing. Thank you very much. Good morning to you, sir. Boy, you're not going to get hit by a car wearing that shirt today.
No, sir.
I guess your future is so bright, I have to wear shades. Let's talk about this. Why are we leaking lower? I mean, we just can't get the bulls. I mean, we've had a kind of an up and downy week, but it seems like these short hedge funds, at least to start off February, feel pretty fat and happy.
They certainly do. I do think we saw a little bit of end of the month type of positioning. We saw that, midday into the closing bell in corn, soybeans, and to a lesser extent wheat on not only Tuesday and Wednesday to end the month. So it looked like kind of some window dressing. There really isn't much in the way of a change of any type of forecast, Scott. It looks like Brazil's going to produce a really big crop after some adversity early in the season. It's a little bit dry in Argentina, and that's something that bears watching and probably why we're not pushing a lot lower. But the soybean sales that came out this morning were marking near low. Extreme disappointment there. And there really wasn't any cancellations to speak of. It's just lack of buyers at this point in time. Now, we did have a private sale announcement of soybeans to Mexico, about 207 million tons. I question, we usually don't sell soybeans to Mexico. Usually we sell corn. I just wonder if the USD at some point will come back and revise this as a corn sale instead of a soybean sale. It doesn't make a lot of sense. But hey, that's the news that we're dealt with this morning. After those exports were released at 7:30, soybeans did drop another 3 or 4 cents into that closing bell. So they've kind of factored in these poor export numbers already, but there just isn't a lot of fundamental support to lift these values or to get those funds that you talked about out of their short positions to cover those shorts and give us some sort of a rally.
Quick question. I don't know if you heard this, maybe you did, maybe you didn't, but earlier in the week, I think I remember seeing something come across the wires saying that we actually imported beans from South America this week into the southeast coast somewhere. Was that true?
Yeah, we had heard those rumors as well. I think it was Pilgrim's Poultry was the company. I think the name of it. It's a poultry plant, and they brought soybeans in. It was actually cheaper to import soybeans into North Carolina than to have them shipped there or trucked there. And we've seen this happen, a lot of times in this time of the year because basis levels in Brazil just falling out of bed at this time because of their impending harvest. They're maybe 10, 12% done as of last week, could push to maybe 18, 19% done this week. So they're advancing in their harvest. And when that happens, basis widens out. Yeah. That makes things even cheaper. And unfortunately, there was some beans being imported into North Carolina.
We're going to talk about this on the Cow Guy Close later on this afternoon, but we've got a war going here because of what, say, Jay Powell said yesterday after the FOMC meeting about rates, kind of poured cold water on maybe rate cuts anytime soon. So that's got the U.S. dollar strengthening on the board. But you've also got the 10-year yield breaking because the 10-year yield sees what average mom and pop on the Main Street are feeling about the economy. So it's interesting to see our actual interest rates come easier, which would normally bring our currency easier. But with what he had to say yesterday, it's actually shot the currency higher. So I'm going to be interested to see how that plays out. We got a little bit of a war going on.
Yeah, you're absolutely right. And a lot of people don't talk about this, but there's probably only a 36% chance now of a rate cut in March.
Exactly.
It's very likely they won't cut rates at any time, maybe in June, but that's down from 75% just a month ago. And that sent that dollar sharply higher. That's going to hurt commodities overall in general. You can see gold and silver really falling out of bed this morning because of that strength in the dollar.
I'm glad you had something to say about that. That's perfect stuff. All right, we're going to go away. Stay right there. We're going to pay some bills. We're going to go back and talk about that report we had yesterday in cattle. We'll be right back. All right, let's take a look. Welcome back, and let's take a look at whatever we say. Let's show you where we start, right? This is where the cattle closed yesterday. Well, the livestock closed yesterday. We got live cattle. Just a little easier. I guess the April was really where they took most of the selling. $1.05 lower there. 180.70 was last. Let's see what we did yesterday in the feeders. They, too, were pretty close to home, except for the March. $1.17 lowered at 240.15, and then we had lean hogs. What do they do for us? Well, they were kind of schizophrenic. Look at that. A little something for everybody. We call it a smorgasbord. Feb's up 50 cents to 76.35. We had a 7-cent loss in the April, so that was down. Feb was up. In May, that was sharply unchanged. How about that? So there's nothing going on there. But we had that cattle report overnight, and that's why we've got our guest analyst on to bring us what he thinks of what that garnered. What do you think about that? What was anything in there that was surprising?
No, not surprising, but very bullish overall. No surprises. The trade really nailed the report going into it, but it did highlight the smallest herd size since 1951, the smallest beef cows herd since 1961. So you're talking a lot of years that we've seen go by that doesn't match this small of a herd size. And we've had a lot of rain in the moisture throughout the plains regions. That's going to restore some of the pasture health. I think you're probably going to see even more heifers being retained, put on grass. It's going to shrink these sizes even further. So I think you have to be optimistic going into, for sure, that second quarter and maybe even into the summer months for cattle futures this year.
Isn't it? I mean, this is something, it's hard to teach young traders and investors what I'm about to say, but I think you'd agree. You have to worry about fundamentals. I get it. You have to worry about technicals. I get it. Some people worry about both, right? There's different kind of camps in what you look at. But there's one thing that people have a hard time with because it's so psychological, and that's sentiment, right? And that cattle sentiment from, say, August, September of last year, all the way into the end of the year was horrible. However, there wasn't really anything changing fundamentally out there. And this report kind of proves that. What do you say?
Yeah, you're absolutely right. The sentiment changed when the funds started to sell, and they sold in a big way,
Right.
Everybody got real bearish because that door for them to exit was very small, and there was a lot of positions to get out of. So fundamentally, we overdid it to the downside, no doubt about it. And now we've recovered and probably definitely put in a low through the winter months.
And I'm smelling that sentiment change to the other side now. All right, thanks very much for being on. Brian Hoops, he's with Midwest Marketing Solutions. He's the big shot there. He's the president. So bring it back here to Nashville, Music Row, and say good morning to Christina.